there's two ways I've seen gold bottom over the years in my career. One, it ends with the spike to the downside and a calamity, basically, where everybody panics. Or B, you get a sell-off and then it just kind of drifts sideways for a couple months and just everybody kind of loses interest. It doesn't go down, doesn't go up.
We're talking here on the afternoon after market close of October 26th. And as we saw today, gold has given back some of its gains from this recent rally that took it above the $1,800 level again. And in your writing, you've talked about this compression triangle in gold. So what is this compression triangle and what is it telling you right now?
Well, it's just a technical formation here. We can pull up the chart. It's right here. So you can see in green is basically the most recent one. You had a larger one that has since gone away. But you broke out to the upside on Friday and then, oddly enough, closed right back in it after you turned over, after Powell said exactly what he said before. There was no new information there. Mm-hmm. That's why that was a little odd. But there again, the question was that an excuse for something that the market was going to do anyway? I suspect probably so. But then yesterday, we finally closed outside of it for a day. We didn't take out Friday's high. And then today, you can see we've drifted back towards you. You didn't close. It's hard to tell on this chart how exactly. You kind of closed right on it. And I don't see where you're back below you're just above the 200 day, it looks like. No, actually, you're a nickel below it. Not that I think a nickel, dollar here or there doesn't really matter. But it's just another, with these compression triangles, a lot of times what will happen when you break out of them, if you don't immediately accelerate and rip higher, or conversely to the downside, same thing, you'll get what's known, the commodity traders call it a first way, wrong way move. So first way seems to be up to, breaks out one direction. That's the wrong way. It actually breaks in the opposite. And, I don't know if that's indeed what's going to happen or not, but like I said, it's a common thing that happens. Mm-hmm. But, just going back to, like I said, basically, sadly enough, gold's been in a bear market since August of 2020. Had a nice rally here into June. And then since then, you've kind of basically resumed kind of bear market action, 200 days going down, 50s below the 200. You tried to kind of triple bottom at this, 1670 level that we hit back in March. But, the question is always, so as all this has been happening, everything else has been melting up. Commodities, stocks, Bitcoin, everything. Everybody's talking about inflation, yet gold trades bad. So the question is, why is that? Whenever something doesn't act like it should, that should always, make you wonder what exactly is going on. And, I can remember this happening, oddly enough, back in 2013, when the Fed was similarly doing QE and gold started going down after December of 2012. And that did not turn out well. And not that this is 2013, but the fact that gold trades the way it does, given the environment and the sentiment around inflation, is not positive in my view. It doesn't mean it's going to crater $200 tomorrow, but it's just, it doesn't act right. I think I remember I said the exact same thing back in January. It didn't act right. And sure enough, it went lower. Mm-hmm. So unfortunately, I think this is going to have to end either with, there's two ways I've seen gold bottom over the years in my career. One, it ends with the spike to the downside and a, calamity, basically, where everybody panics. Or B, you get a sell-off and then it just kind of drifts sideways for a couple months and just everybody kind of loses interest. It doesn't go down, doesn't go up, just kind of flops around. Same with the mining equities. And then all of a sudden, for no reason, they take off again. But I think you're probably looking at something like that. And if you look, here we can go back to that real quick. Hang on a second. since June, each one of these little rallies that we've had, this one started at the end of July, basically ended and collapsed about 30 days later, roughly, more give or take. Mm-hmm. This rally began early August. It ended the end of September, collapsed. So it ended about 30 days later. Well, here this rally began the end of September. Here we are. You're in that 30-day window now between now and the FOMC next week, where pattern doesn't have to play out the same. It could be different. Mm-hmm. But the fact that you've not accelerated the upside after having broken this downtrend, and everybody, you broke the downtrend. GLD's holdings actually went down on Friday again. Another new low for the year. So you're in a zone of danger, I think, over the next, let's call it 7 trading days, 10 trading days, whatever, going into the FOMC. And, with the dollar index now starting to head back to its high, could make for unpleasantness next week.
Mm-hmm. Can looking at the price of gold in other currencies be helpful to you in any way?
I mean, I think it is. I look at it, every day in the major currencies just to see what it's doing. Oddly enough, it looks about the same as it does in dollars, and not a whole lot's going on except a little bit in yen. But I look at it, but it's not something that I add a tremendous amount of weight to.
Mm-hmm.